What's up everyone, it's Caddy with Money Vesting. So in this video, we are going to be talking about employment in the United States. I will be going over everything. Literally, when I say everything, we'll be going over everything you need to know about unemployment and of course non-farm payrolls, and we'll talk about participation rates, average hourly earnings, the consensus for next week. And there's been a lot of questions and confusion in the past and people asking me in the comments, Caddy, how is it possible that we see an increase in the month-over-month jobs? In other words, jobs being added in the US economy, and yet the unemployment rate goes up, or vice versa. So all that confusion will be cleared up in this video. I've got a very nice spreadsheet laid out for you that I'm going to explain using some actual practical and real numbers. So I hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. It's going to be a little bit more educational type video as well. So make sure that you do subscribe to the channel if you haven't already. And the link to our Discord and Patreon is going to be down below if you're interested in joining us, of course. And there is a 16% discount for a limited time available for a limited spots. Also, you'll get access to all the alerts, trade ideas, and a lot of other private videos and tutorials and lectures as well. So first things first, what we are going to go over is the employment situation, right? So this is going to be the consensus for going into next week. So what's the consensus for Friday, March 10th? That's when we get the employment numbers. And the consensus is 215,000 jobs to be added month over month. These are non-farm payrolls, right? I haven't really gone over into so much detail in employment. I figured I'd just do that now because employment is going to start to become more and more important as time goes on. And it's really important for us to have a very good understanding on what these numbers actually mean and represent for the economy. So non-farm payrolls is the number of payrolls, in other words, jobs added in the US economy, excluding agriculture, right? That's why it's non-farm, right? Because we're not considering farmers and agriculture positions, but instead non-farm jobs. So 215,000 is going to be that consensus. Unemployment rate is expected to stay steady at 3.4%, and private payrolls at 213,000. That's the consensus. And participation rate, which I think is going to be very important and where we're going to spend a lot of time, 62.4% in the prior month, and consensus for this upcoming Friday, we don't have one, but participation rate is pretty much the population or the amount of people that already are employed or are actively looking for work. Okay, so these are not all the total eligible workers. This is not the total population of the United States, but instead the number of people that are actively either employed or are actively seeking work in the US. Now, you might be wondering or asking yourself, what happens to the remainder 30% or 38%? Well, these could be people that are currently retirees. They could be students. They could be people that are disabled. They could be, caregivers. A lot of people that kind of fit that bucket of, okay, they might be over 16 years of age that are eligible workers, so to speak, but they are retirees, students, caregivers. Some of the demographics that I mentioned. That's what makes up the other 38% of the participation rate, right? So that's why they're not considered in the participation rate. So this is a spreadsheet that I wanted to go over, which I think is going to be very interesting, and I wanted to explain what every single metric actually means and where we really need to be paying attention to moving forward, so you have a really good understanding on what to really look for with these employment prints moving forward. So I've broken it down into COVID, of course, great financial crisis, the dot-com bubble, and the great inflation of the 1970s. And what I have over here is the actual population of the United States. So let me just write that down, USA population. And of that population, how many are 16 years or older, right? Because they're the ones that are considered as eligible workers. So that's a percentage. And this right here is going to be simply that eligible workers. So that's that 80% of the entire US population. And then we've got participating population. Again, these are people that are actually either employed or actively seeking work. So that's going to be closer to 60%. It's been pretty consistent at around 62%, because the other 40%, like I said, could be retirees, because a lot of the population of the US also is over 60 years old. And a lot of them are, either retired already, of course, caregivers, students between 20 and 24. In fact, I think closer to 20 million people in the US are students between the ages of 20 and 24. So they kind kind of fit that bucket, that are not currently actively seeking employment, that are currently studying, obviously getting their degrees, so they don't fit that criteria. So participating population is simply people that are employed, actively seeking employment, and the rate is simply calculated by taking that participation rate, participation population, and dividing that by total eligible workers to make it to 62.4%. And this is going to be the total unemployed persons in the US. Right now, we're sitting at just a little bit under 6 million people, and the unemployment rate that we get down to at 3.5, 3.4%, whatever that number is. Right now, we're, I think, closer to 3.4%. Again, these are just rough estimates. These are not like super accurate, just to give you an idea on where we are. This is calculated based on the unemployed persons, I should say, 5.81 million, divided by the participating population, right? So 166 million, because that's how many people are participating in the labor force, right? So that's going to be 3.5%. So that's the complete number here. And of course, JOLTS right now is sitting at a little bit over 11 million. So, of course, that's how many job openings there are in the US at over 11 million, and unemployed persons are 5.81 million. So again, that's the same number here. And that's why that's ratio, right? So vacancies to unemployed people is closer to 2, which is a very tight labor market, which is also what Jerome Powell has mentioned in his previous testimonies and speeches. And of course, we've heard from a lot of, Fed members that the labor market's super tight. There's almost two vacancies for every one unemployed person. And that's the number that they're quoting, is that the JOLTS numbers is closer to 11 million, whereas the unemployed persons, participating persons, are closer to under 6 million. That's why we've got a very, very low unemployment rate as well. Now, I wanted to go over what is the reasoning or the thesis behind, why does the unemployment rate goes up even if we actually end up adding jobs. So I wanted to kind of break that down in a more visual and data-driven way, as opposed to just me telling you, so that this will kind of stick with you and that will clear up the confusion. So right now, as it stands, 160 million is going to be total employed persons, and total unemployed persons 5.81, right? So that's the number, because if you do the calculation here, we've got a participating population of 166 million, and we've got unemployed persons at 5.81. So if you pretty much do the math here, you add these two up, that's going to be 166 million that we have all the way up here, right? So that should be pretty self-explanatory. So in the US, as it stands right now, on a very rough basis, we've got 160 million people that are currently employed, and 5.81 million people that are currently not employed, and hence the unemployment rate of 3.5%. So, what happens if we add close to 250,000 jobs in the upcoming month, right? So in, let's say, February, the jobs report comes out next week, and the consensus right now is 215,000. I'm just making things a lot easier in terms of this calculation, so I'm going with 250,000. So let's just say the total jobs added is 250,000, so 0.25. What happens to the total employed people, right? This number actually increases, so we just add that 250,000 jobs added, right? So total employed persons go up 260 million. And this is not taking into account, one person having 2, 3, multiple different jobs. This is simply keeping calculations very, very clear so that it's much easier for you to understand. And the reason why the unemployment rate might also go up with the jobs being added, and this doesn't happen all the time, but we have seen that happen in the past, and that's exactly why I'm explaining that to you. The reason why that would happen is if there are more entrants in the labor force, and that labor force entrants are higher than the amount of jobs being added in the US economy. So for example, if we added 250,000 jobs, but instead we had over 500,000 people enter the labor force, that's going to make that unemployment rate tick up, even though we had jobs being added closer to 250,000. And how does the math work out? Well, we simply add the 250,000 here. So now the new total employed people are 160.44 million. We had new entrants in the labor force, 0.5, right, million, in other words, 500,000. So the total unemployed number also goes up when you simply add the difference, right? So now we've got 250,000 people that are currently new in the labor force, but are also unemployed, right? So that total new unemployed number jumps from 5.81 to 6.06. So now the new unemployment rate is simply going to be taking into account the total unemployed divided by the total eligible for employed. So this has got to be a little bit of a correction here that I just realized, and that's going to be the sum of both of these numbers here. And that's going to be 3.64%, and that's going to be a little bit higher than what we had earlier at 3.5%, right? So it's going to be taking into account the entire number, because now we've got a participating population up half a million, right? Because that's the new entrance, right? 166.5 million participating population as opposed to 166, or no, yeah, 166 million. That was the earlier number, right? 166 to 166.5. So that's that slight increase in that participating population in the US. Participation rate pretty much stays steady at 62.59%. Same thing as earlier, 62.41%. But the only reason for that change in that unemployment number, as you can see over here, it went up to 3.64%, is because from 3.5% is because we've got more entrants in the labor force as opposed to the jobs being created. So that's kind of like the explanation behind, and hopefully that clears up some of the confusion why we might be in a scenario where, and you might find, the jobs numbers being gained. So we are seeing a little bit of an addition in the number of jobs being added, but at the same time, unemployment rate also going higher. So hopefully that kind of clears things up a little bit. But this right here is also the breakdown between all the previous few times we've seen a significant increase in the unemployment rate, and broken down by different sort of course, key events. So COVID of 2020, we had unemployment rate get up to over 14.44%. Participation rate, as you'll notice, was pretty stable at 60%. So we still have a lot of people either employed or actively seeking employment. However, unemployment persons pretty much went up to over 23 million people. And as a result, the unemployment rate was pretty high, right? 23 million people unemployed out of 160 million participating population. So you've got a 14.4% in unemployment rate. Same thing during the great financial crisis. We had over 15.4 million people unemployed in the US, and that pretty much led the unemployment rate to go up to over 10%. And the dot-com bubble bust, we had over 8.5 million. We didn't quite cross 7% threshold unemployment back then, so that was the number. And during the great inflation of 1970s, we got up to as much as 11.3 million in unemployed persons, and the unemployment rate sitting at over 10.7%. This is all adjusted for population, so you'll notice that back then 226 million population, during the 2000s 281 million population in the US, 304, and the last couple of years it's been pretty relatively flat, 330, 332, around those levels. And participation rate has been pretty stable at around 62%. However, it did drop back in the great inflation time, 1970s. There were fewer people participating in the labor force to kind of seek out employment. So if 2023 is anything similar to what we have seen in great inflation because of how inflation high it is, and of course inflation running rampant at over 6%, much higher than the Fed's target, and the Federal Reserve obviously decides to be more aggressive with their interest rate hikes and policies, then it is not unlikely for us to believe that unemployment rate could take up higher. In fact, the Federal Reserve themselves believe that unemployment is going to be closer to 4.1%. They've also mentioned that in their SEP. So this is going to be a very, very important metric for us to focus on moving forward. And there's a couple specific metrics to also look at. Number one, of course, that unemployed persons, right? So what is going to be that unemployed persons? Is that going higher or lower? Right now, we're 5.8 million. So if that number continues to go up, obviously with the amount of tech layoffs and the other layoffs that we're seeing, eventually on a net basis, this number should start to creep up a little bit. That's number one. And the participation rate, right? That's also going to be very, very important because this is simply a metric understanding how many people are actually either actively employed or seeking out employment. Because if this number starts to drop, then you will automatically see unemployment rate goes up, right? So for example, 160, drops down from 166 to 160, unemployment rate goes up to 3.63%. If it drops down to 150, we're just getting up to almost 4%. And that's also going to be a double-edged sword because as participating populations going down, we're also seeing unemployed persons go up. So if it goes up to 8 million, then all of a sudden you've got a higher and higher unemployment rate. So two really, really important metrics for us to focus on are going to be the participation rate, right? So participating population, is that going down or is that staying the same, right? That's going to be very important because if this number starts to go down, well, guess what happens? It's inversely correlated to unemployment rate. That will start ticking up. And of course, the unemployed persons, because if there's fewer people participating in the labor force, of course, there's more people unemployed, and that's obviously going to happen, and unemployed rates going to start to push back up. So that's what we have to really focus on. And like I said, I mean, the highest I could see, 2023 unemployment rate get up to, and again, this is just based on my estimates here, is going to be closer to like, 6 to 7, I would say 7 to 8% is kind of like an estimate that I had in mind. If the Federal Reserve continues to hike rates as aggressively as they have been, and of course, there's an economic recession that actually hits, consumer spending starts to drop, debt levels with the way they're rising, if they continue to push higher, the highest levels that I could see for unemployment is closer to 7 to 8%. That's kind of like the worst case scenario for unemployment, in my opinion. So hope you guys enjoyed this video and a complete update on the unemployment rate, and hopefully you got a lot of value out of this, and at least got a good understanding on, you know, how unemployment works in the US. What is that participation rate? You know, how can the unemployment rate go up even though we're adding jobs in the US? Hopefully that helps. And the two things that I'm really encouraging guys to focus on is the participation rate. If that starts to go down, that is worrisome. And then the second thing is the unemployed persons in the US. Is that going higher or lower? If that starts going up, then obviously that's also going to be a problem for the US from an employment standpoint as well. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below. So always happy investing, and I will see you all in the next video.